Process of successful winning trades.
Okay, good morning and welcome to week 2 of the training. So how has it been? So let's quickly do a recap of what we have been able to do so far. So we said we have 5 steps to a successful trading. So number 1, the first step as a trader is ability to be able to identify the overhaul. Yes, trend. But this word is very, very important. Overall. Overall simply means the total, the main trend in the market, because we've learned about trends. We said we have 2 types of trends. Abi? What are they? We have minor and major. So if you say, okay, identify the trend, we need to specify the type of trend. So now, the first step is to be able to identify the overall. The overall also means major trends. Because in understanding the overall trends, the swing trend, the major trends, is what we actually tell you to know the next move of the markets. Is what help us to prepare ourselves as a trader to strategically position ourselves to join the overall trend. Last week we looked at Euro USD and we noticed how market has been dropping for about 16 years on a bearish trend. So that bearish trend, for example, let's look at it again, is what we call the immediate overall trend. The immediate overall trend. So we go to monthly. So now, for example, since 2008, June 2008 till date, till 2024. So the overall trend, the major trend on the market has been what? A bearish trend. So this is the major trend now, because we are seeing this trend from the monthly time frame, monthly perspective. 2008 till date, that was about 16 years, right? So if market has been falling, it means that euro has been depreciating against dollar for the past 16 years. So that's what we are talking about. So for you to make a sound decision in the market as a trader, we need to identify the overall trends. So how do we identify the overall trend? You go to go to monthly time frame, zoom out the charts, zoom out the charts to see the previous and the immediate trend. So process of identifying the major trend is to go to monthly time frame, you zoom out the charts. So by zooming out the charts, we said we have only two types of trend, right? Bullish trend or bearish trend. So for us to be having bearish trend at the moment, you can see that market has done what also? A bullish trend. So this becomes our previous trend, while this is our current trend, which is the immediate trend. So now let me explain further. So let's now assume that, oh, this is our previous trend. Now the previous trend failed and the sentiment changed to bearish. Bearish. So now the next thing we want to do, which is the second process, is what? Tell me. Identify and plotting of major. I want you to include that in your notes. So the process should start with the major, identifying major trends, identify and plotting of major key levels. So we said any trend from monthly down to daily are major trends. So why any trend is derived from 4 hours to 15 minutes are minor trends. So same thing with the identifying and plotting of major key levels. So we start plotting the key levels from monthly, weekly, daily, and 4 hours. Because when we say, okay, identify and plotting of key levels, it means that you can plot your key level on 5 minutes, or 1 minute, or 15 minutes, right? But the process, what will launch you into profitable trades is to be ability to be able to do the major. The major is what will now launch you to the point of daily activities or scalping activities. But like I've been saying, at Red Global Forex Institute, we don't encourage our students to trade as a scalpers. Minimum of intraday strategy. So we will still get to that. So now, to identify and plotting our key level, we said you need to go to the history. You look left. It's like traveling into the history. History, what has happened. This is moment, right? And this is future. So the future is the reason why we are in the business. It's because we know that, oh, this market have what it takes, right, to give us future opportunity. That's why we're in the business. So to plot our key level, we said we have three ways of analyzing the market. What are they? Technical, fundamental, and sentimental. but we are majoring on technical now. And we say technical analysis focus on the historical event of the economy. So to be able to identify and plotting of your major key levels, which are what? When we're talking about key levels means support and resistance. Where support is our demand zone, right? And resistance is our supply zone. So we said anywhere that market appreciates in value is referred to as support. Any price that prevented the market from advancing in price is what? Resistance. So we identify support, resistance, support, resistance, support, resistance, support, resistance, support, resistance, support. That's identification. So we've identified them. So after identifying them, the next thing is to do what? To plot them. Plotting. So how do you plot them? So you now put your the horizontal line this way. You look at the higher eye. So you connect this to this. You can see this is resistance, but later in the future it's serving as what? Support, right? So again, higher high, higher low. So you plot it. From support, market found a fresh demand, right? So like this, we plot it. Remember, we treat our key level as a zone, not exact price. So plus minus pips. Abi? So this is resistance here, support here, support here. So the low. So we plot again. Then the fresh high. The fresh high like this. The low, nothing to plot, support, support. The market did a fresh higher high, higher low. So we plot it again. It's clear. And we said that trends help us to know where the market is coming from, right? We still remember that. Trend identification help us to understand where the market is coming from or where the economy is coming from. Because when we're talking about market simply means economy. Then the key levels now help us to understand where the market is. How? Now, having plotted our key levels, you can now see the horizontal line now travel into the future. So now, at this moment, this is our CMP. So when we are plotting the key levels, we will plot from monthly, weekly, and daily, and 4 hours, right? So after done this, that's what we now take us to the next process, which is market analysis. But before we get to market analysis, I'm only trying to bring up us to this to this page. So now we said trend help us to know where the market is coming from. Key levels help us to know where the market is. So now the market is here currently. This is our CMP. What is CMP? Current market price, right? So now key levels help us to know where the market is, right? So it means that now, based on this plotting, let's assume that we plotted all these key level on monthly or weekly or daily or 4 hours. Now we know that market is at monthly support and monthly resistance. So this become our immediate support. It becomes our immediate resistance. Are we getting it? That's what key levels help us to do. Because if you do not plot the key level, we will if you leave the chart open, we will be confused. We will not know where the market is going to. But for example now, market did a lower low to this support. At this support, what happened? We expect the market to find demand, abi? So this type of demand now is lower high. But currently we can see that market is ranging between these two key levels. And market will only have one support and one resistance per time. So what we want to look at this week is market analysis. So if trends help us to know where the market is coming from, and key levels help us to know where the market is. The market analysis is what will now help us to know where the market is going to, what is going to be the likely move of the market. Either market is going to go up or market will come down. We have our question mark. So that's what market analysis is all about. Clear? So now, we'll be moving on to the next lesson. So okay, yeah, welcome back. So after the first step, second step, the third step is market analysis. What is market analysis? So market analysis is the process of evaluating, interpreting market data and information to make informed trading decisions. Market analysis is the process of evaluating, interpreting market data and information to make informed trading decisions. So as a trader, our JD, the core of our operation is to be able to analyze. What makes a trader is an ability to analyze the markets to make informed trading decision. So, and the process of analysis is to evaluate. One, you evaluate, that is, you gauge what is going on in the market. After gauging, you will now interpret what you evaluate. And that's what will now lead us to make informed trading decisions. So you don't just jump on the market and say, I want to buy or I want to sell, because one can't do it for me now. Oh yeah, let me sell. One can't do is buying. Oh yeah, let me buy. No, that's not how to trade. I've told us that to make money in Forex trading, you need to understand the trends. So you gauge the overall sentiment of the market. So that's what market analysis focus on. So having done that, that helps you to make informed trading decision. So now, keep this thing simple. I don't care about whatever other people are teaching out there. But based on practical experience, and based on what is working. This morning, when we are on short break, I just closed a trade that I placed about 2 hours ago. There is no doubt we have different strategies of analyzing the markets and making informed decisions. But at Red Global, what I'm dishing out is Red Global strategy. And like I've told you, that what is strategy? Strategy is just the way you understand the market and the way you can interpret it to maximize the opportunity in the market based on what is working for us as an academy and as the pioneer of the academy. So I'm a trader before a trainer. What has been working? You know, they say it's only fool that without proof. It's only a fool that without proof. So when you have a proof for something, and it's not a proof of 1 day, 1 month, 2 months, it's a proof that has been working for years. Our strategy, what I'm teaching you, is what has been working for years and it will continue to work. So keep it simple. Market analysis, like we have said, is the process of evaluating, interpreting to make. What are you interpreting? You are gauging market data. You are interpreting market data to make informed decisions. So after you have done, you've identified trends. Let's say this is our trend, previous trend, immediate trend. This is the immediate trend now. This is the previous trend. And you've identified and plotting of the key levels. So now, this is the first and the second process. He said the trend helps us to know where the market is coming from. Key levels help us to know where the market is. And market analysis will help us to know where the market is going. On this market now, for example, this is our CMP. It means that this is where the market is currently. If you are to pick that price, for example, let's say 110 hundredths, that is our current market price. So what type of trend do we have for, what is it called, for the immediate trend now? Bearish. Thank you. I love that. So what makes a bearish trend is what? Multiple of lower low, lower high. Yeah. So market analysis just focus on the last leg of your immediate trend. So now, where is the last leg of this immediate trend? Last leg simply means if lower low, lower high is what makes a leg of a trend. Multiple of it now makes a trend. But when we're talking about a leg of a trend simply means the process of lower low and lower high. This is what market analysis focus major on. So after doing your plotting the key level, market analysis, which is the third step, is just identify the last leg of the market, which is this lower low, lower high. So you will now plot your Fibo from here to here. It will now give you something like this: 0, 23, 38, 50, 61.8. But now you can see that current market price is in between 38 and 50. And we said market analysis help us to know where the market is going to next. Knowing fully that this market is in a bearish trend. So what makes a bearish trend? We said a sustainable bearish trend at the maximum of 61.8 or 50, either or 38, can be the continuity of the trend. So at the moment, the market is in between 38 and 50. As a professional trader, this is where patience comes in. So once you now analyze the last leg, we said if the trend will continue, it may continue from here or 50. Now market has gone above 38. So you will now be paying attention to what will happen at 50. If market get to 50 and keep moving, it get to 50. And at 50, market still coming. So at the maximum of 61.8, if the trend is going to continue to be a bearish trend, so you will now see market coming down. So at this point now, you can do what? Sell. Because the overall trend is bearish. That's what market analysis is all about. Two guarantee movements that will occur in the market is either market buy or sell. Aside those two, what happened? We have consolidation, right? So now with this, at the maximum of 61.8 or at 50 here, you expect the market to start doing what? Coming down. Sell. So now, is it that market we sell or market will break this 61.8? And we said if market should break 61.8, what do we have now? Huh? Reversal. So it means that market has reversed this entire sell with buy. So if market close above this 61.8 now, it can also create an intraday buying opportunity, because if market will not start selling at 61, instead of selling, now close above and continue to go, it means that you can also buy intraday wise. But the truth is that it's not good to trade against the trend. If there is anything to do, we've proved it last week, whereby you see trend forming in a particular direction for a very long time. Look at this. This is 4 hours now. What do we have? A bearish trend. So the best thing to do is to trade in the direction, in the flow of a trend until the trend, until the sentiment changed in the market. So now we are going to join the theory process together. The trend, identify and plotting of the key levels, and analyzing the markets. So when we put the theory together and we analyze, analysis is what will now take us to the fourth process, which is market execution. But before we move on to market execution, we still have a lot to cover under market analysis. We need to look at the market in a different way. So the analysis simply focuses on, is the ongoing trend will continue or it will do what? Reverse. That's what market analysis is all about. Is the ongoing trend will continue, you said, or there will be a reversal which may create now a buying opportunity. So a thorough informed decision, informed analysis is what will help us to know what may happen. But like I've been saying, that nobody is expected to analyze the market correctly 100%. But the analysis will help us to be able to analyze between 70 to 80% out of 100. And with our strategy at Red Global Forex Institute, if you can analyze as a beginner, even 50 out of 100, you will always be in good profit. I'm going to show us. Clear? So we are moving on to the chart now. So we will pop up a fresh chart. Okay, we've plotted key level on Euro USD. So we can now use it for the analysis now. So let's go to Euro USD. Okay, you know what we're going to do? Let's do it afresh. The plotting. Let's do it afresh to combine the trade process together so that we will all be on the same page. So pop up Euro USD, clean up your charts by removing period separator. Whenever you see all these arrows on your charts, it means trade history. It means the history of what you have done in the market. To remove them, just right click on the charts, click on the properties, then check show trade history. Okay, you can see it's a clean chart now. So now, the first time we plotted key levels, what we do is we use zigzag, right? But this time around, I want us to do raw plotting. The moving average. Click on charts to remove any indicator you do not want on your chart. Click on the chart. Click on the indicator list. Then click on moving average and delete. So let's go to monthly. So we zoom out and you travel to the beginning of the chart. So for your monthly, you pick a different color for your key levels. I normally use red for my monthly key level. You know, red symbolize danger. It means that about danger now, that is dangerous opportunity. It means that when market is moving towards any red key levels on my chart, it means that monthly selling or buying opportunity is loading. So when you are plotting your key levels, you use a different color. I was using myself as an example that I normally use what is it called, red color for my monthly key levels. Any red color, either horizontal key levels, moving average key levels, trend line key level, psychological price key level, Fibonacci retracement key levels, any red key levels you see on my chart, I know is my monthly key levels. So any yellow key levels, I know anything yellow on my chart is my weekly analysis. Any daily, I have color for daily and for 4 hours too. So you can use your own preferred color. So now I'm changing this to red. So it has changed to red. To change the color, all you need to do is right click. You click on properties, then you change the color to the color of your choice. So I remain on red. So, and remember, when you are plotting your key level, you don't use words. You don't leave it open. You always close it. So we are monthly. We scroll to the history based on what your laptop, the data your laptop can carry. So to go to the history, you click on this, scroll the chart to the end on tick incoming. You will now press, you hold on your back key. Now, currently, I'm on 1971 on Euro USD. So you might decide that, oh, because 1971 to date, that's about 54 years. Another trader might say, oh, 40 years is okay for me, 30 years is okay for me, 20 years is okay for me. But the truth is that the deeper you go into the history, yes, the better informed you will become. Remember the analogy we've been using that if I want to know about a particular family and I'm asking from the children of the family, they will be able to tell me about their family, but not concrete information. But if I should ask the parents will be able to tell me more. So if I should start asking from the uncle, from the grandfather, great grandfather, so I will be able to have more information about that family. So same thing, you cannot consider 50 years data to 30 years data to 20 years data to 5 years data. The deeper you go in having your key levels from far history, the better for you. So what are we trying to do? So the first key level, we are now, the plotting of the key level, we start by following the process, the movement of the market. So for example, the first key level on this market is this level. So please, if you have any question, ask me. You know, we are on the third stage now. So that is why I keep going back to do recap so that we can get you. So now from here, are we on the same page? Market did what? Higher high, right? So I will identify the high, which is here. Higher high. So can you see the significance of this high? Yes. It's serving as so now the significance of this, let me change it to red, as resistance. Yeah, right. So as resistance, yeah. So as resistance here, even without going to so please look up resistance, 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 right? So what we plotted is higher high, right? Low high. Then from there, market now do lower, sorry, higher high, higher low. So we identify the low. So for you to know that history is so, it's a history has a way of repeating itself. So it's serving as support here. Let's look at the significance. He said key levels which are support and resistance. They are important price level in the market because they have a way of influencing the behavior of the markets in the future. Support. You know, we have not moved to the future. We are still using the history. And we can see, look at the significance here. Support, right? Several years later, 1983, in 1972, 73, thereabouts, it acted as support. Now, in 1983, also acted as, see, this just movement, this movement, let me do calculation. You know, what market, key does for us is that it helps us to open what? Door. So key levels in the market also help us to open the doors of buying and selling. This all run, this is 811, 811 pips. Oh, sorry. I'm not sure what I did is right. Let me confirm. In trading, you don't assume. You have to work it. 849. Yes. 849 pips. I don't know, maybe you are getting it. No, it's showing points. But in the pip class, so if you want to call it pip, you will say 849. But if you want to call it pipettes or points, pipette and point means the same thing. So now it's 8,490 points or pipettes, but 849 pips. So if you use Red Global template for position sizing, 849 simply means 84.9% of your account balance. So it means if you are trading with account of $100, because you identified this key level in 1974 and market came there in 1983, that was about 9 years after. And because of that, you now make decision to buy. So your $100, because of that transaction, it will be plus $84. That's 84% of your account. So let's assume you are trading with account of $1,000. This will add about $840 to your trading account. If it is 10,000, what is it called? $10,000. So it will have about 8,000 for you to know how powerful key levels can be. We said key levels are our area of support and resistance. They are important key levels because they can influence, they have historical significance and they have what it takes to influence the price in the future. So this is history now, right? Sorry, history. Now, based on this now, you know this is 9 years after. See what he's doing. So it's clear, right? So let's continue. So now market did higher high, higher low. Then we expect a fresh higher high. But what happened? Excuse me. Market now created double top. Because what is higher high? Higher high is when the market, this is higher high, that is higher high, higher low, right? What makes higher high is only when the market closes above this previous high. If not, it means double top. Higher high is only when the market closes above the previous high. You can see this one is higher, this level now is higher than this level, right? This is higher high. But now in this case, reverse is the case. Instead of higher high, after higher high, higher low, market was going up, going up, going up. It get to the previous high and it stopped. It came down again, so we will identify. But you can now see from here what now happened. Market now made a fresh higher high. So let's go. So we are just following the posts. I told us that you do not need any indicator to plot key levels. It's just by following the steps of the market. So from here, market now made a massive fresh high. That is, the next move was here. So, and from here, market came down to create low, went up again, could not break it, now came down. So we will identify this level. The market went up again. It could not break the level. Instead, it started coming down. So now market now came down to this level. So we can identify this. Then from here, market went up again to create another high. So market came down again to this level, went up again to create another level. So we are now moving gradually to the future to see the market shoot up, see massive buying from here. Back, 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 back. This is more than year, 1 year, and created another level. Then from here, what happened? Market sold down to this level. Went up, nothing to plot, right? Came down, nothing to plot. Then went up again to created another level. Then came down to create another level here. I want you also to be doing it on your chart so that we can be on the same page. Practice make perfection. You will plot it, it will not get to a point whereby there will not be nothing to plot. All what you plotted from the history will now be speaking for the current oscillation. Oscillation means the market formation. And that's what is happening on my chart now. So these are monthly key levels. So when you are done with your plotting, let me know. So we will now count how many resistance you have and how many supports. So I'm done with my horizontal key levels.
So for this one,
Mm.
the zone will be too much for this one. The calculate.
But if there is significance, plot it, because I could say other.
This.
Okay, it's too much. Ignore it. So after plotting, let me know how many key level you have in total. Or to manage stress, hold on. How will you know how many supports and how many resistance you have? Now, using this as an example, this is 1, 2, 3, 4, 5, 6. For example, this is a 6 key levels. How will I know how many support I have, how many resistance I have? To know, to check that, you will now look at for where you have your CMP. So any key level below your CMP are automatic your support. Any key level above your CMP are automatic your resistance. So now I want you to check. So let's see if we are having the same stuff. So you count it. Yeah? No, you can never tell. In trading, you don't assume. You have to be sure. So, okay, how many support do you have? I think. So it means you do not capture all the levels. Yes. I want you to go back to the history and start following them. Because for me now, I'm having 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 14 supports. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 resistance. Okay. So just go, oh yeah, go to the history. So let's start tracing it. Okay. So you're supposed to plot here. So these are monthly horizontal key level now. Horizontal monthly key level. Horizontal monthly key level. So he said, having done this, so if the trend is on a bullish trend, you will now connect your trend line key levels by connecting the lows. These are lows, 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 lows. So the most important thing in plotting your trend line is low one, low two. So the first two, exactly. You can see it now give us this A, B, C. You can see what happened in A is what happened in B, what happened in C, D, right? Now market cannot advance again. So it now moved out of the trend line. So now because the overall trend is bearish now, so you will now connect the high. This is first high, second high. So we now connect. So this one now will now be trend line monthly key level, CMKL. This one, sorry. Yes, you can still add that, but I think the best way is to trend line monthly resistance, support rather, TMS, trend line monthly support. So this one will now be trend line monthly what? Resistance. So now, so let's, because market is on monthly bearish trend now. So we now connect this, the first high to the second high. So my line is showing blue. I will change the color to the red. So like I said, between your point A and point B, there must not be any form of obstruction. I'm sure we are reading our trend line materials already. You can see point A, point B, no obstruction. But you can see at C, there was an obstruction. It does not matter. But for A and B, there must not be any form of obstruction. It must be clean. So A, B, give us C. You can see D. But now you can see that when the trend line traveled into the future, market has gone out of it multiple times, right? First time, second time, third time. So this will now become our primary trend line because market has created another level. So I think it's better we use this way. You can see A, B, C, but market has gone out of it now. So we will now use the same A to look out for another B for the new level, which is A, that is A, then the new level will now be B. So we have things like this. So, sorry, the first one, market has gone out of it. It's now serving as support for the market. So the new one, which is for the new level, is what market is now eyeing now. So this is on this now, we are having monthly horizontal key levels and monthly trend line resistance key levels. So now we are having two strategies on this chart now, horizontal and trend line, because there are different strategies on their own. Horizontal key levels are strategy on its own that some trader, that's what they use to trade. They only use horizontal key levels as their some demand and supply zone to trade. Why some traders just use the trend line. So it depends on which one you understand. But what we are trying to do at Rev Global is to combine strategies, like working with 6 strategies on your charts. So know how market will be reacting to one at a time. One. Secondly, market will not be able to escape, because if market is not reacting to horizontal key level strategy, it will react to trend line key levels. If it's not reacting to trend line key level, it will react to maybe psychological. So now combining strategy help us to now have a confluence in the market. Confluence simply means that when two or more technical levels are confirming the same thing. For example, let me look for an example here. Example is this. You can see this is horizontal resistance, right? Trend line also is serving as resistance. Same thing with here. Another one is here. This one is even perfect. You can see market is at resistance, right? You expect the market to fall at resistance, right? To sell. And the trend line also was crossing the same stop. You can see the massive drop. This is more than a year, the market, because there was two confluence for the market to react the way it reacted. So we go for lunch. So when we return, so we continue from there. So do you have any questions for now? Okay. All right. So let's go for lunch. So we are coming back 12:40.